Assalamualaikum and good morning everyone. We are from Group 4. We'll be presenting a case study of Gemas Berhad. Before we start, let's meet our group members. I'm Rajin Nabila binti Raja Muhammad Akhiruddin. The next presenter is Nurul Izzati binti Muhammad Arapa, followed by Siti Khadijah binti Muhammad Yusof, and last is Ainul Hidayah binti Abdul Hadi. I will read the case study first before we jump into the questions. The board of Gemas Berhad, an unlisted company, is planning to set up an internal control and audit function due to recent rapid growth in the company's operation. Greater control over internal activities is needed since the increasing of the size and the complexity of its operation. The proposal was to appoint an internal auditor at mid-management level and also to establish an audit committee comprised solely of independent directors. It was decided that the new internal auditor needed to be a person of some experience with enough personality and not to be intimidated nor diverted by other department heads who might find the internal audits an inconvenience. One debate the board had was whether it would be better to recruit for the position from inside or outside the company. A second argument was over the limits of authority that the internal auditor might be given. It was pointed out that while the board considered the role of internal audit to be very important, it didn't want it to interfere with the activities of other departments to point where their operational effectiveness was reduced. Based on the above case, A. Explain 4 benefits of internal control systems established in an organization. B. Define independent internal auditors in the area of internal audit work. And last, explain the benefits of appointing the new internal auditor from outside the company.
Hello, I'm Nurul Izzati and I'll be presenting the first question. Internal controls are the practical components of corporate governance. It is a process affected by an entity's board of directors, management, and other personnel designed to provide reasonable assurance regarding the achievement of objectives relating to operations, reporting, and compliance. It is also the first line of defense against fraud, waste, and abuse and helps agencies achieve its missions effectively and efficiently. In regards to corporate governance, internal controls can help the organization monitor activities and take corrective actions to accomplish the organizational goals. There are 4 benefits of establishing internal control systems in an organization. The first benefit is the effectiveness and efficiency of operations. Procedures for monitoring the appropriateness and effectiveness of the controls should be embedded within the organization's everyday operations. It can help prevent errors, enhance the efficiency of operations in the long term. Moreover, it helps to ensure efficient and effective operations that accomplish the company's goals while protecting employees and assets. In this case, Gemas Berhad had rapid growth in the company's operations, thus it increased the size and complexity of operations. Hence, the company must set up an internal control system to ensure the effectiveness and efficiency of operations. The second benefit is reliability of financial reporting. Internal controls make sure that financial information is carefully reviewed to minimize errors. Besides, it helps ensure the quality of internal and external reporting. The financial report should have a clear path through the organization with good internal controls so that the path can easily be retraced. In the case of Gemas Berhad, the audit committee members must be non-executive directors and the majority with independent directors. The internal auditors shall be independent of executive management and shall not engage in the activities or systems they audit. Moreover, they are also given access to information on all areas and can report freely on any errors or omissions found. Therefore, the financial report trail will help the company achieve and maintain compliance with the Corporate Governance Guide Bursa Malaysia. But it will also allow the shareholders and stakeholders to feel more confident about their investments as they all rely on financial reports to make decisions. The third benefit is compliance with applicable laws and regulations. The purpose of establishing an internal control system is to provide reasonable assurance that an organization's operations are effective and efficient, its financial disclosures are reliable, and it meets regulatory compliance objectives. By having an internal control system in place, an organization will be able to align the business processes with applicable laws, compliance requirements, and industry standard practices. It also assures that the company operates responsibly, ethically, and reliably while reducing its legal exposure. Organizations must conduct activities or take specific actions in accordance with applicable laws and regulations. Thus, organization needs to understand which laws and regulations apply across the organization, as laws and regulations establish minimum standards of conduct, and it is expected to be incorporated into the objectives set for the organization. Finally, the fourth benefit is safeguarding the organization assets. It refers to the policies and procedures that provide reasonable assurance regarding prevention or timely detection of unauthorized acquisition, use, or disposition of the company's assets that could have a material effect on the financial statements. In other words, it is to guard against loss of assets because of theft, accidental destruction, and errors. Assurance must exist that transactions related to assets have been properly processed and that appropriate physical handling and control over assets exist. Therefore, having an internal control system in place ensures that when such losses occur, the system will provide reasonable assurance that those losses are properly reflected in the financial statements, thereby alerting financial statement users to consider the need for action.
I will proceed with the definition of independent internal auditors in the area of internal audit work. The internal audit activity must be independent, and internal auditors must be objective in performing their work. To comply with the standard, internal auditors must understand what independence and objectivity are and what is required in practice. In short, independence and objectivity means that internal auditors and the internal audit activity must maintain the ability to make unbiased judgment and decision based on the audit activities and facts, and that they are free from any internal or external interference or obstruction, with functional accountability being to the board, either directly or through an audit committee. By acting independently, internal audit must assure the level of security of information are being protected and avoid any conflict of interest that could damage the objectivity and independence view of internal audit work. The internal auditor should have act based on independence of mind and independence of appearance. There are three benefits of appointing the new internal auditors from outside the company that will be discussed today. The first of it is an internal auditors from outside the company could provide better knowledge. The outsourced internal auditors are certified consultants, thus they have better knowledge and greater expertise of all the issues either on industrial level or in general, and they can provide better solution for those issues which in-house auditors may not identify. In this way, the internal auditors help to improve the efficiency of the operations, minimize the risk, and it could improve the organization's reputation. With the wide range of skills, experience and knowledge by internal audit provider, they are able to spot redundancy in organization business practices, operational procedure, and governance processes compliance. Thus, they are able to come up with the recommendation on how to optimize these areas to save time and money.
Secondly, the benefit of outsourcing internal auditor is it helps to reduce costs. It also helps in reducing the company's investment in continual training on training requirement or frequent turnover of auditor. The reason is when a firm engage an internal auditor, the monthly compensation is required to be paid for the internal auditor as well as their training and travel expenses. Moreover, the management of the firm should also consider the cost of initial training for their internal auditors, the cost of retraining new internal auditors every year when turnover occurs, and the cost of retraining whenever the standard requirement change. However, if the firm outsources an internal auditor, it can help in reducing the cost due to the reason that certified internal auditors are already skilled and do not require training carried out by the organization. With that being said, the firm is able to cut off the training allowance, and also they do not require a set of compensation every month. With this, it greatly contributes to the organization financial stability. The third benefit of outsourcing internal auditor is they promote higher productivity and quality. The outsourced internal auditor from an independent audit firm seeks to increase an organization productivity by delivering quality result on time. The quality assurance that they offer is that an internal auditor can detect any suspicious activities or transaction in a company while investigating risk management to prevent financial crimes. Moreover, a team of outsourced internal auditor can provide detailed report on the company's operation and give the business owner a better understanding of the organizational control.
To conclude, internal control system within an organization are essential for growing organizations. Besides, professional internal audit provides insight that boards need to make effective decisions and independent assurance over how well the business is managing its risk and whether corporate governance processes are operating effectively. This system results in improvement, effectiveness, and efficiency in operations. Companies anticipating growth should embrace an excellent internal control system to manage the company's internal affairs. Thus, the company that set up the internal control system is more successful than the company that does not set up the system.